I've been getting a lot of questions from you guys. The main question is always, hey, Kevin, why do you always wait for the last 10 minutes to take a swing? In reality, it's the last 5 minutes. Um, Definitely, it's very different than a lot of people, what a lot of people do. Um, and it's definitely not because of procrastination, right? I don't just wait here and I wait till the last 10 minutes or the last 5 minutes to take a trade just because, hey, I don't want to look at anything during the day. No, that's not exactly the fact, right? So there's specific reasons why I do it, and I've stated multiple times in the past that I think swing trading is potentially where I've personally made the most money compared to day trading, right? And it's not like my day trading success is lower. It's just the gap ups and gap downs warrant a lot more return versus the amount of capital that you risk. So we're going to talk about why I wait for the last 10 minutes for swings. And the way we're going to do this is we're going to look at the benefits and the drawbacks of this, because there's always benefits and drawbacks for everything. And again, this is just streaming. I'm streaming this from my iPad. If you guys have any problem viewing it, um, tag me in the main chat or something like that. So, all right, benefits and drawbacks. Again, I just wrote this out because I had a little bit of time. First drawback, doesn't apply to most people, is people on Discord have a hard time entering. I'm sorry. I mean, I'll apologize up front. I know I post like sometimes even 2 minutes or 1 minute before market close. I try my best. Sometimes it's hard. I can work on that. I don't have the excuse of school anymore, but anyway, yeah, I'll improve on that, right? The other drawback that you would possibly face from doing this is you could possibly miss out on a better entry. What do I mean by this? Let's say I'm like looking at Coca-Cola calls during the day and I'm thinking, hey, I want to take Coca-Cola calls. It looks great. But let's say at that moment, Coca-Cola is at $61, but I'm like, let me wait till the last 10 minutes. And then during like 2 hours later, when it's the last 2 minutes, instead of Coca-Cola being at $61, maybe it's at $61.50. And I miss out on, let's say, like 10 to 20% of the contract, right? So that's a drawback. But again, those are only two drawbacks that I've experienced. And now we're going to go over the benefits of what I have faced when waiting the last 10 minutes. The first one is less room for errors. What do I mean by this? Just like how I talked about on the drawback, how you could potentially miss out on a better entry, when I have waited for the last 10 minutes to take a swing trade, I also possibly miss out on taking a false flag. For example, again, let's say we're looking at Coca-Cola. Let's say we're looking 2 hours before market close and we're like, hey, calls look great. And I enter calls then, but for some reason, let's just say a level rejects or anything like that, and then I end up being red on those calls, and that setup I saw does not really look that great anymore 10 minutes before market close. I'm kind of screwed, right? I need to either take the loss or I just try to hold it and see what happens. And I'm not about holding and just hoping something happens for me, right? So there's less room for errors. I'm not just sitting here letting, I'm not on the charts feeling anxious, like, oh my gosh, wait, this looks great, I gotta take it. No, I don't feel that, because when I wait till the last 10 minutes, I only have the last 10 minutes to actually execute a trade, and I only have 10 minutes to be wrong, right? After that, everything's out of my hands. At 4 p.m. Eastern, that's it. Market close, I can't control what happens to the stock. I can't control my entry. I can't trim, not until next day open. So, but vice versa, when I take a swing trade, a trade that's intended to be a swing earlier in the day, I have a lot more room for error. I have a lot more room to possibly trim out earlier. I have room to possibly exit for a loss when it could reverse into the upside. I could possibly get into a setup that ends up not looking that great in the end of the day. So there's less room for errors, right? The next benefit that I found out was I can view more data. What do I mean by this? I'll kind of show you guys in the chart as well. But when I say you can view more data, it's more like you could see more candles on the chart, right? If you're looking at the 30-minute chart, for example, which I keep on referring to a lot because it's honestly my favorite time frame. I get to see more candles on it, right? And the more candles you have to view, the more data you have to make a more informed decision into what kind of sentiment you have and is that setup really valid, okay? The next one is I'm not stuck in potential chop. The last thing I want is I get into a call for something and I have 2 hours or 3 hours of where the stock just goes up and down and stays in the same area, and my contract is just getting eaten by theta, right? Even if it's a few cents, a few dollars, I don't care. That's money that I put in that I'm losing that I could have put in effectively or efficiently near the end of the day for an even better result, right? The next thing is I'm not affected by sudden and unpredictable market hour news. You guys have seen this, you guys have experienced this. Anytime you take a swing, not anytime, but a lot of times when you take a swing and let's say a news comes out, always depends on the stock you take, because some stocks are more affected by news while others are not. But even if you look away from news and you look at economic events like FOMC, like we have Jerome Powell talking this week, right? So when you take these positions earlier during the day, there's been a lot of times where something unpredictable happens, right? News oriented or economic event data, data related, and the position no longer looks great. So why be stuck in that, and why not avoid that and wait till the dust settles, and then wait till the last 10 minutes, right? The next one is I get to view the whole daily candle to its fullest value. This is one of the most important points that I don't get why people don't understand. When you're looking throughout the day at the daily candle or the daily time frame for a chart and you're looking at a swing, that daily candle is not the correct, or it's just not, you're not viewing it to its fullest value, because that daily candle can change 2 hours before the market, 1 hour before the market, even 4 hours, right? So what you're looking, let's say the market opens and it's 2 hours in, right? It's around, I'm in Eastern time zone, so that's around 11:30 a.m. Eastern. And around 11:30 a.m. Eastern, let's say the daily candle, Coca-Cola looks great. Oh my gosh, that it's gonna break out, looks great. It's bounced on this level. I got a wick to the downside. I got a full body candle on the daily. How many times have you gotten into a swing trade looking at the daily candle before the last 10 minutes or before the last few minutes, and it looks so great, and you enter a trade and it turns out you entered too early because you're not using the daily time frame right, because you're not viewing it to its full extent. Of course, if you look at the prior daily candles, then it's a little different, but if you look back at all my swing trades, what sets me apart from other swing traders is the fact that I'm very efficient in my entries. Meaning, I don't usually, for most of my swing trades, enter and wait multiple days on end for me to get the move that I want. I try to specifically get the move that I want either the next day or the day after that. Usually, you guys have experienced it. Usually, you figure out with my trades the day after whether it's going great or if it's not going great. And majority of the time, it's gone great. So the biggest reason is because I get to actually view the daily candle and see how it's close to printing, because I wait. Similar to that, as I talked about earlier, I love the 30-minute chart. So I get to view the final read on the 30-minute chart. The 30-minute chart is great for swinging, in my opinion, because it allows you to view, how do I put this? It allows you to view mini trends that could lead up into bigger trends that affect time frames such as the daily or the weekly. And the 30-minute is really what tells me personally for my swings if I'm getting a great entry or not. So I want to see as much as I can on the 30-minute to make sure I get what I want. And the last thing I want is to enter and then, enter let's say even an hour before the market closes, and then the last 30-minute candle, let's say it goes up to a level that I wanted to break or broke above before, and then all of a sudden it just rejects, right? For whatever reason. Maybe there's just a lot of sellers there. Maybe there's just some rumor news. Who knows? Things happen. I don't want to be stuck in that. So when I tie all these things together, right, basically I'm able to get a lot better reads on my swing trades. And that's why I've had a lot of success in swinging the past, I've almost swung for 11 years now. So I've always waited this long. I've always waited till the last second. In the end, the way I view trading is I want to be, here's something that I wish more people had the perspective of, but I can't change people. But one thing that's led to my success, one of the thoughts I've always thought about is I want to find a reason why I should not be in a trade that I want to get into. What I mean by that is, let's take, for example, the Bank of America trade, and we'll get into the charts of the swings I took and what I'm talking about, but I just want to talk here for a second. Let's take that Bank of America trade that I entered in today. When I'm actively going through the possible swing trades that I'm looking at, each ticker I'm going through that I thought looks great or looks possibly great for calls, or just a swing trade, because generally I swing calls, I'm always looking for a reason not to enter that trade, because I rather sit out of a trade that I don't like and end up not getting those gains, instead of getting into a trade that I thought was great and then just getting into it and then even though it doesn't look the greatest, and then I end up losing money for that. Like I personally don't see the point in that. So maybe, why do I think that way? Maybe because I'm Indian, so I'm naturally stingy. But when I go through my watch list, because what I do is I don't look at, for when it comes to swings, I do not look at any chart on a bigger time frame that I intend to swing until the last 30 minutes of the market. So at 3:30 Eastern, that's when I go onto my watch list, and I'll get into a whole watch list thing in just a second. Actually, you know what? I'll pull it up. I'll pull that up in just a second, but I go through my watch list 30 minutes before close, and that's when I start looking through everything. And then I flag the ones that I like, which goes into the flagged watch list, and then that's when I go through a flag watch list and I ask my question, why do I not want to take this trade? Let me find a reason why I don't want to take this trade. And the second I find one reason, I automatically remove it from that list. So the list goes from having like 30 tickers, I kid you not, like 30 tickers that I want to potentially swing, to 15. And then I go again, I scroll through them. It goes from 15 to 10. I scroll through them again. It goes from 10 to 4. And then from 4, it usually goes to 2 or 1. So when I ask myself that question, can I find a reason to not get into that trade? It kind of zeroes out the trades that I don't necessarily like, because then I'm able to enter trades and not feel stressed out overnight thinking, hey, damn, I got into a trade that I didn't really feel great about. I'm not really sure why I got into it when I didn't like how great it looks. Instead, that's it. Like, let's say I get into a trade that I know I really like. I didn't find any reasons why I would not like getting into it. I get off. I get off at 4:30 Eastern time for my computers. I don't look at any charts, and I feel stress free. And it's not because, hey, Kevin has money, or Kevin has he doesn't need to worry about money. It's not like that. It's because I know that I did as much as I can, and I put the effort as I can to find things that are valuable and show quality. Then now it's out of my hands. Whereas if I took a trade that I liked at first and it doesn't look that great, but I still took it, I still had, in my head, I'm thinking I still had the opportunity to get out of that, or not even take that, and take things that I actually like. So I just wanted to stick that with you guys, because that's one of the biggest lessons I've learned, and one of the things I always do every single day. I always try to find reasons not to get into a trade, whether it's swing trading or day trading, but I think it's very important for swing trading to think about that. But the last thing I wanted to talk about was, again, as I said, the reason why I wait is not just because I want to wait. It's because the fact is I've experienced substantial increase in swing accuracy after doing this. You guys can look back at my trading log. I don't care what year. You could go. It's all there. All those trade ideas are posted on Discord from whatever server. It does not matter. The proof is there. And my accuracy is unlike a lot of other people compared to some people have insider information. I can't compete with that. But when I compete with people who don't have inside information, I stand out. And it's not because I'm special. It's because I just have rules that are logical, and I put myself in areas where I don't have bad habits, or I can't, what's the word? I can't feed into bad habits, and I'm only getting into trades that I like. So I want to leave less room for error, right? I talked about this, less room for error. That's the main point, and all these additional points here. So that's the whole chalkboard, or whatever we want to call it, part of this whole talk. So I'm going to bring over my chart here, and we're going to go over the whole few points that I talked about when I talked about the daily candle read and the 30-minute chart. So first off, before we get into the swings that I got in today or yesterday, let me reference back to what I was saying when I said I come back onto my charts the last 30 minutes. So no matter what day of the week it is, I don't look at any bigger time frame with the intention of finding a swing trade. If I look at a bigger time frame before 3:30 p.m. Eastern, by the way, the markets close at 4 p.m. Option markets close at 4 p.m. Eastern if you're not in this time zone. So when I look at 3:30, anytime before 3:30, if I look at a bigger time frame, it's only for day trades, and that's it. If I'm seeing like the daily candle bouncing on a level, I'm not thinking of, hey, this is going to be a swing trade. No, I'm just only thinking for day trades, right? If I am going to take a day trade. The reason why I do that, very simple. We kind of went over it. I don't want to get excited about a trade. I don't want to think, hey, this trade looks great. I need to, try to get into this and feel like that. So that's why I avoid looking until 30 minutes before market close. So 30 minutes before market close, I go into my watch list. You guys know in the live sessions chat under the, I believe it's the links channel, you'll see here that I believe if I scroll up, I posted it here somewhere. Somewhere in one of the channels, I posted both JP's and I's watch list that we look at. We have two watch lists. There's one that's the full watch list of like the S&P 500. Both of us has this. And then we have like a mainly traded one, which kind of like takes out all the stocks from the S&P 500 we don't usually trade and kind of focuses on the ones that I usually trade, right? So 30 minutes before market close, what I do, I go onto this watch list. I go onto a daily time frame and I look through each stock. And all I do is I quickly scroll through each one and I try to see which daily candles look nice, which daily charts look nice, right? And if I like something, I personally put a yellow flag. The yellow flag for me is basically my whole swing thing. So this talks about like whenever I put a yellow flag on something, it pops up over here under this section called potential swings, right? So you could set this up all by yourself if you want to. But I do this and I go through my watch list and I'm trying to find something and trying to see, okay, is there anything interesting? And let's say I go through my whole watch list. I found a few that looks interesting on daily. Next thing I do is I go into the 30 minute and I go through a 30 minute and I see, okay, I go through the whole watch list again really quickly. I see, is there anything I like to see? Is there anything that catches my eye? One thing we talked about in the last live session, or I think 2 live sessions ago, is I said it was in the watch list live session where I said one of the most important things when it comes to swing trading is I scroll through my watch list very quickly, and there's a reason for that. It's because if I don't see something right away in front of my eyes, I'm not going to enter it. For example, I'm going through, let's say I went through Amazon, I don't see anything interesting here. Lowe's, nothing interesting here. TGX, okay, hold on. Something caught my eye here, right? So that's immediately, I see something catches my eye. Okay, fine. I'll put a flag on it. I'll come back and view it later. Why did this catch my eye? Because we have 2 30-minute candles that are extremely bullish, right? We have a huge wick to the downside on the prior 30-minute. And this current 30-minute, even though the market's closed, but I'm just giving an example, the current 30-minute candle has another wick to the downside and it has a nice bullish candle to the upside. So I scroll through my watch list quickly because the last thing I want to do is find reasons to be in a trade and trying to manifest reasons when why not just look at the trades that actually are presented right in front of my eyes, right? So that's the first thing. I go through the whole thing. I go through my whole watch list, kind of zero it down on the stocks that I want to look at. And then I'm just going to flag a bunch of them just so it could pop up on the watch list. So I got a few on my watch list. I come over here, right? Let's say from 3:30, it's been like 15 minutes, right? So now it's 3:45, so 15 minutes before close. That's when I start looking at the charts that I picked and I start scrolling through them. I look at the daily chart. I'm like, okay, like let's look at Charles Schwab, for instance. I'm like, okay, daily candle looks great. It's kind of a little bit high, close to a possible double top. So maybe not really. I look at the 30-minute. I'm like, okay, I mean, the 30-minute looks great. You're creating higher lows. You broke past the previous resistance, right? This area right over here, you're attempting to break the previous high all the way from Tuesday. So I'm finding reasons to be in the trade and I'm finding reasons not to be in the trade. And if it's easier for me to find reasons not to be in the trade, like for example, if I look at AMD, I don't find a reason to be in this trade personally because it doesn't match the criteria that I like. Hey, AMD can go up 4% tomorrow. I still will not be butthurt about it because I know I can look back and be like, hey, 30-minute didn't present what I like. The daily candle didn't really present what I like. The only thing the daily candle had going for it is the fact there was a wick to the downside. And the 30-minute, I mean, yes, there's two bullish candles, but as we talked about in the previous live sessions, the most important thing that I really love seeing on any bullish candle is a wick to the downside because what that represents is the strength of the buyers compared to the sellers. So I didn't see that. I didn't see that in this bounce, right? You can only refer to this bounce right over here in this wick, but this bounce has no wick on it. So you know what? That's it. All right, I uncheck AMD, move on, right? Google, okay, Google looks a little bit better because Google has a 30-minute candle which has a bottom wick, but you kind of get the whole process to it, right? So it's going through this. It's the fact that this is a great part, the fact that I have less time means I need to go through this quickly. And yes, you can sit there and say, hey Kevin, you can go through this quickly and be fine because you've had the experience and the eye to kind of view things, right? But my statement or my question to you is, how are you going to reach that experience, or how are you going to reach having that efficient of an eye to view the criteria of the price action you want if you're not going to put yourself in situations where you can potentially do that, right? So why do that? Why not push yourself to be very quick in your judgment, right? One of the things that kills traders is hesitation. Because what does hesitation leads? Hesitation leads to you thinking a lot more, overthinking. And when you overthink about trades, yes, sometimes it might work out, but a lot of times it doesn't because you try to manifest things. You get more biased, right? Now, you always hear that emotions are not great when it comes to trading, and that's completely true. I sound monotone to you because unfortunately, I'm a very monotone person, but that works out for me because I can sit here and I don't let my emotions get into trades, but I also am a human in the end. So because of that, I put myself in certain restrictions, or I limit myself in certain ways where I don't make the mistakes I would make if I were to take a trade earlier in the day. If you guys remember, 2 months ago, I took a Verizon trade. The Verizon trade looked amazing. I'm telling you, that trade should have gone to 600% at the moment I was looking at it. I was looking at it, I kid you not, 1 hour before market close. What happens? I take that trade. Verizon goes up 20%. I only get one trim out. on Verizon. And then it rejects a level that I did not see, right? So I made a mistake there. I did not see that level. It rejects that level, and the contracts immediately go below break even. I think there were like 5% loss, and the market closed. Eventually, I was like, you know what? Let me just hold on to this. And I don't know if you guys remember this Verizon trade. And the next day, Verizon opened up, and we were down 40% on those contracts. So because I didn't wait, if I waited that day, like I usually do, and looked at Verizon and looked at the chart at the last few minutes, I would not have gone into those calls. If you guys remember, 5 months ago, there was a Microsoft trade. I took Microsoft puts. Those puts looked amazing 20 minutes before the market closed. 20 minutes. Those puts look like we're going to go to 300%. And I'm not making up these numbers. If I look at a strike price, if I look at an option, I could kind of guess where the option premiums can go to because it's kind of simple math, right? So that trade could have gone huge. But what happened the last 10 minutes? I kid you not, 5 minutes after I entered, so I think it was like 15 minutes before market close, Microsoft and the rest of NASDAQ had a severe reversal into the upside, and Microsoft ended up closing above a level that was a very important support. And the daily candle looked extremely different. And that trade ended up being a 60% loss because the next day the entire NASDAQ, Nvidia, and Microsoft reversed into the upside and gapped up. And I kid you not, I sat there the next day and I thought, if I looked at that 30-minute chart, if I looked at that daily chart right 10 minutes before market closed, before I entered, and I thought to myself, would I enter that? I would not have. And the funny thing is, the next day I had ended up exiting for a 60% loss. And that day, because I was so pissed I didn't look at Microsoft again, that day if I looked at Microsoft again the last 10 minutes, I would have gotten puts, and I would have caught a 200% trade on Microsoft. So that's why it's very important for me, and maybe for you, to kind of limit yourself into making dumb decisions and kind of make it very, very limited in the amount of time you could look at charts for swing trades. Because I'm telling you from personal experience, swing trades can be great, but if you don't do it right, it could wreck your account. If you put yourself in situations where I hate using this term, but I can't think of anything else. If you put yourself in situations where the risk to reward is great, you're always going to end up eventually, God willing, profitable, because you're putting yourself in areas where, even if you get two wrong, but you get two right, since you put yourself in areas where it's greater reward than risk, those two winners should outweigh your losers. So there's a lot of things to this. There's a lot of steps. It's not easy to swing, but it becomes a lot easier if you just limit yourself from viewing the amount of nonsense that goes throughout the day. I know majority of you guys have not been here trading for more than 2 to 3 years, and that's completely fine. But I could tell you, the market the past 3 years has been, in fact, let me even shorten it down. The market the past 2 years has been extremely volatile. What I mean is, you can go and look at any chart. You could even go to SPY and QQQ, whatever you prefer to look at. And if you look at the daily candle, you will see the amount of huge wicks that are on this chart. And that's volatility to you, because that means the stock will go up, the stock will go down, the stock will go up, all in sudden sharp movements that are predictable, yes, but are sometimes not predictable. And something that looks great 4 hours into the market, or even 5 hours into the market, will not look that great the last 10 minutes of the market. So that's why I think this point is very important to get across. So now I'm going to go into the two swing trades, and I'm actually also going to go into TLT and Lululemon, the swing trades we took. Today's Monday, right? So last week, I'm going to talk to you about my whole thought process of what exactly I saw and why I liked it. So when we come into Bank of America, the way this daily candle was looking, what I saw here when 10 minutes, I think it was like 15 minutes before market close, I was going through my watch list, and I saw Bank of America, and the daily chart did not catch my eye. What caught my eye was the 30-minute chart, because what I saw here on the 30-minute time frame was this, right? And I'll kind of draw it for you. Jesus.
You're right there, buddy?
Yeah, I know, right? I need to drink some water. But this is what I saw. A common suggestion I have for people when they say it's hard to identify trend, I would always say the easiest thing to do is just take the brush tool, or take the path tool, or whatever you want to use, and just draw the path of the chart. And when you do that, you yourself, since you're drawing it out, as cliche and as cheesy as this sounds, it works. You will find that you end up kind of figuring out what the trend is. Just by looking at this, you can easily tell this chart looks, or this area right over here, is more bullish than bearish. Why? Because you have a curve into the upside. You have higher lows. You guys have heard that term before. You have multiple higher lows. You have a lower high. Yes, you have a lower high here, but then you have a higher high, and you have another higher high, and you're trying to break out of this. And even if you remove all of this, you can draw yourself a trend line. Wow. You can draw yourself a trend line right here and see that, right? So if you find it, if you're struggling to identify a trend, maybe you could just draw it out. If you don't want to draw it out, use the line chart, right? The line chart is very simplistic. It just kind of shows you the true close of each candle, and you could kind of see where without all the noise, what's really going on. But anyway, I saw here this pattern on Bank of America. So I'm going to draw this out for you. And I'm going to say to you that patterns is one of the most crucial things that I've found in my trading career. The reason is because I've always stated before, and we'll get into price action soon next month, but I've always said that price action is nothing more than just being able to read out in front of you human emotions, right? Whether it's panic, greed, fear, whatever terms you want to use, you're just kind of reading that out, right? Confidence, cockiness, whatever it is, right? A strong bounce off of a level, that's not weakness, that's strength, that's cockiness, right? That's greed. So when you read this, right? When I draw this out for you, you'll see that this same pattern over here is similar to this pattern right over here. And if you kind of visualize the shapes, right, you'll see they're almost practically the same thing. And the reason why it's not coincidental, or whatever the right word is because humans are naturally attracted to patterns. They follow patterns. We all follow patterns without even knowing it or knowing it. And patterns usually tend to repeat themselves. Just like history, right? There's always a phrase like history always repeats itself. Well, history doesn't always technically repeat itself. History is often, what's the saying? It's like history doesn't repeat itself, it often rhymes. That's the same thing with patterns, right? Patterns don't often repeat itself. They often, I don't know, that sounds dumb now that I say it out loud, but you get my point. Patterns usually repeat over and over again on any chart. And that's why if you hone in on a stock like Tesla, a lot of the patterns you see there on Tesla will repeat over and over again, time and time again. And those patterns will have a higher success rate. So on Bank of America, this is a pattern that ends up always playing out. And I'm not saying it works out all the time. I'm saying maybe out of 10 times, if you were to catalog all this type of pattern, out of 10 times, maybe it works out 7 or 8 times. 7 or 8 winners and 3 losers, that's a win, right? So that's why I got into this Bank of America trade. I love the 30-minute. I was scrolling past through my finance stock, and Bank of America came, and I saw the uptrend here. I saw the fact that we broke past these previous highs, and then I'm like, okay, all right, the 30-minute looks really bullish. So that means if the 30-minute looks bullish, let me look at the 2-hour. Okay, 2-hour kind of has like a breaking out kind of pattern. Where would be my target? I guess the previous you could say either the previous high over here or previous high all the way over here, right? So I have my 2 targets over here. And then when I go to the daily candle, I'm like, okay, all right. I could kind of see that we're having a curve, right? Curve is one of the most important things in any bullish trade. What a curve represents to you is the accumulation of buyers. So you got a curve here on the daily. I'm like, all right, okay. I'm not finding any reasons not to be in the trade, any valid, strong reasons not to be in the trade. I want to take this. And this is what I do. I said I wanted to take this 10 minutes before market close. I still waited. I did not look at the contracts, and I do not look at any option contracts until the last 7 or 6 minutes. That's up to preference. You could do completely different. The reason why I do that is because I feel like when I look at it, when I try to figure out what option I want to get into, I'm going to get into that trade. And I feel like I allow a lot more bias than what's actually shown up in front of me. So I'd rather, wait 2 more minutes, look at the other charts that I have, see if I like anything else, and then come back to that. And then if it still looks good, I'll look at the option, right? I'll look at the strikes that work out. And that's when, around 3:55, 5 minutes before close, that's when I started looking for contracts for Bank of America. And I think what contracts did we pick? We picked the let me see what I posted.
48.
The 48, yeah, 48 calls for 214. There you go, right? Yeah, I've talked about before for swing trades, I like taking 2 to 3 weeks out. So I got the contracts I wanted. Since I already have the rules of 2 to 3 weeks out, and I usually like getting contracts within the price range of 28 cents to $1.50. Primarily, I like the contracts being a lot more expensive, so above like 70 cents to $1.50. I already know in the back of my head what my criteria is, so I don't feel like I need to look at the option chain beforehand. Let's get into Target, right? Because I posted the Bank of America trade 3 minutes before market close. I posted at 3:57. Target, I was already looking at beforehand. Reason I got into this is you guys have probably heard of this. If not, it's not your fault. A lot of people don't talk about it. I'm not sure why. But one of the most important things that you can learn in market structure, and no, market structure is not an ICT term, is the Elliot impulse waves, right? I drew this wrong. Technically, the way it should be, what an Elliot impulse wave is basically the prediction of a strength or a trend movement in a certain direction. So you kind of like map it out in front of you. So the reason why I took this trade is because we clearly had a first impulse wave, and then we had a cool off, and then we are having the second impulse wave. And because of the strength we had heading into close, and the fact we close above this level 141.70, which again, if you see over here, because this is the great part, since you're waiting to see throughout the day what happens, you could see here that once it reaches this level, we kind of broke through it, right? We didn't really have much hesitation. Yeah, we didn't have an immense candle to the upside, but we had candles that didn't really seem to have much hesitation through it. And then when you go back to the chart, you see that this is actually a very important level. Why? Because the last time on January 10th, when Target broke above this level, you can see the bullish candle it had was not really the greatest, when it closed, because it has this wick to the upside. And even though, yes, you could reference this body right here and be like, hey, Kevin, there's this huge body right over here. Why would you not be fully confident in it being bullish? Well, here's my thought process. If buyers are able to push it to this point, but sellers are strong enough to push it back down to a decent amount, kind of shows the amount of the strength of the buyers around this area, right? And that's exactly what kind of proceeded for Target that day. It kind of chopped around this area, and then eventually the next day it broke to the downside. Again, you could see here, what day is this? This is January 7th. January 7th, same thing happened. Target kind of gapped up a little bit, tested this level, rejected. And if we scroll back, you could kind of see that this was actually a prior support that turned into resistance. So this is the level that I was looking at. This is the level that worked for me. This is the criteria I wanted Target to be above. And the plus to this is the fact that the candles were not weak after breaking the candle. And the last 30-minute candle, by the way, I was going to remove Target from my potential swings, but the last 10 minutes, this candle went from being red to massively green. And I think if I go to 5-minute, I'll show you what I'm talking about. Right here, this move down was huge, and this completely changed the 30-minute chart. It literally looked like, it was literally just a red candle from here to here. And obviously, I'm not going to take a trade if it looks like that. But then the closer it got to the last 10 minutes, you could see right here, 350, right? 345, 350, the chart completely changed, because then the candle came back up to 142.13. If I show you, that's where 142.13 is. So I can't really rewind exactly to that 30-minute candle while it was printing out, but you could kind of guess that the way the candle would have looked like is it would have had the same tail, or the wick to the downside, and it would have started turning green. And that itself is very bullish. So that's why it's very important for me to wait till the last 10 minutes. And if we move to a daily candle, a daily chart right here, you see the Elliot impulse wave I drew out. You could see the daily candle closed really strong. The daily candle looked really strong in the last 10 minutes, in the last 5 minutes. And that's why I realized, okay, all right, I like target calls. I quickly, 3:57, 3 minutes before market close, I look at the option chain. I already know what kind of expiration I want, which is 214, which is, I believe, 3 weeks out. Got into those calls. 147 was a great contract because the 146 calls was a great contract because it was not too far of the money and it's kind of close to where I wanted to go, right? Because I already have a target of 148 for my runners, so 146 is close enough. And yeah, that's basically why I wait till the last 10 minutes, and I think it's something that's not gonna be like um it's not gonna like it's not gonna 180 your trading path, whatever it might be. If you're finding, you know, troubles in swing trading, it's not gonna like make you go from being negative all the way to positive, but possibly doing this could help you build good habits that lead you to potentially being profitable. Because swing trading is a lot easier if you just have the right rules. And you'll realize a lot of times swing trading is actually a lot easier than day trading. Because this is the blessing that day trading gives, and not that swing trading gives. Swing trading after 4 p.m. Eastern is completely out of your hands. You can't do anything from 4 p.m. all the way till the next market open, right? Versus a day trade, you're in complete control throughout the lifetime of that trade. Whether it's 5 minutes, 10 minutes, 30 minutes, for 2 hours, that is more room for you to make errors. Errors being exiting for a loss, getting into a false flag, trimming out too early, exiting for a loss and then reversing, so you kind of let your emotions get in the way. There's so many things that happens that is in your hands when you're day trading. But when it comes to swing trading, if you kind of limit yourself, since you're already being limited, and you limit yourself even more, and you kind of leave out the room where emotions could possibly intervene, you could possibly see a different result than what you usually do. And I cannot count how many people take their own swing trades where it looks great before the market close, like I'm talking like 2 hours, 1 hour, 4 hours, right? Halfway through the market day, and it looks great and they'll take it, and they might be up like 30%, and then out of nowhere their swing just rejects and it just does not work. And hey, that can absolutely happen. That can absolutely happen with a trade that you take in the last 10 minutes. But it's less, the reason is less you. And I guess that's the point I'm trying to hone in on. If you find places where the trade doesn't work out and the reason is not because of you, then you can at least think to yourself, okay, I'm at least doing something right. It just didn't work out because maybe I missed one or two things, or maybe, there was a news that came out, or there was some data that came out that just did not work, right? Versus if you take a swing a lot earlier, you're going to end up with the same thoughts that actually leads to bad behaviors, such as, shit, I had 30% on the swing. I was going to swing this, but now I'm down 20%. I should have taken a trim. I should have exited at 30%. Well, what's the downside to that? Well, if you exit at 30%, which by all means is completely fine, but when you exit at, let's say, a smaller percentage, when you could afford to hold runners, you're completely losing the gift of runners, which again, I've stated, is one of the biggest reasons why my account has always grown year after year.
Oh.
So if you remove the gift of runners, how can you expect growth or consistent growth in your trades? Because in the end, the whole goal is you can have 6 losses, but if the four winners you have were big gains because you trimmed correctly and you held runners and you trimmed those runners correctly, those winners will at least bring you possibly back to break even or above break even, right? So that's the whole thing behind this. I'll just quickly go over Lululemon and TLT and why I took it on Friday. Pretty simple. I was looking at this. Where's the close? Okay, there's the close. So I was looking at this before market close. I had on the daily chart, I'll show you right over here, I kind of had this trend line. And I don't know if you guys saw, I don't know if I posted it, but on the weekly, we had a rally and a base and a potential rally, right? That's one of the most common patterns in the market when you have a stable stock, and Lululemon is kind of a stable stock. So we had a potential rally-based rally on the weekly. And on the daily, sorry, I'm burping a little bit. On the daily, we had this trend line that we're breaking above. And I see that trend line, and I see this level we also broke above. And when I go to the 30-minute, I see that the 30-minute did not have much hesitation when breaking above this, right? This candle right here, yes, you can say this is weak, but the fact that we broke right back above it with good strength shows that there's a lot more strength to Lululemon. And lo and behold, today, even though the NASDAQ was down a lot, Lululemon, even though I don't know, I don't understand how Lululemon is a tech company, but Lululemon, those cons ended up going, I think, like 60 or 70%. When it came to TLT, pretty simple. This is another rally-based rally. You could see it if I draw it out right over here, right? A rally, consolidation, and then a nice last 30-minute print, which ended up becoming into the next leg that led into the rally. But yeah, that's all I had to talk about when it came to the last 10 minutes. JP, did you want to add anything? And meanwhile, you guys, if when JP's talking, you guys can feel free to ask questions in the main chat before we head over to the ticker request that you guys want me to go over. But JP, was there anything you want to add to this?
The only thing that I wanted to point out is that a lot of people ask how it is that you obtain targets whenever it is that you're taking swing trades, and I wanted to point out one of the simplest way to do it. So if you can go to Bank of America really quick, Airbeam TV. What is this?
That was the thing I was streaming my iPad on.
All right. So one of the things that I always do is whenever I notice a particular pattern that I identify, which is known as a rectangle pattern, I like to take the full measure of that rectangle and then you draw it out, and then you'll be able to basically grab that rectangle and draw and put and literally move it up to the highest point of that rectangle candle, and it'll give you the price target. So for example, if you were going to grab Bank of America on a 30-minute chart, you would draw a rectangle from the 10 o'clock candle of January 21st. Do you mind doing that? Or you could just drop from the bottom of January 16 to the top of January 21st. Yeah, exactly. And then you just literally just move that up. Yep. And then that's going to give you your price target of where it is that you're going to actually aim to eventually have a PT. So as you can see, one of the things that Kevin and I were discussing when he took that trade was I knew he was going to take the February 14th, and I told him, "Are you taking the 48s?" Because that rectangle was what I drew out to get that 48 target. So whenever you're trading inside of a rectangle and you see that classic up down up down up down move, when it gets to the top of the rectangle, you'll normally have what's called as a triple top. And one of the things that I've always said that I've learned from my mentors and I've always told Kevin, when you knock on the door 3 times, someone's gonna break through it, right? And this is a perfect example of Bank of America trading inside of a rectangle, knocking on the door 3 times, and now trying to make the attempt to make that move. So when people always ask, where are targets, where are targets, where are targets? Well, identify the pattern. If you see a rectangle, do exactly what Kevin just do and move it up, and then you're going to get your PT. And 90% of the time, you'll notice that that's the most active option because everyone is seeing that rectangle pattern. People who actually draw out chart patterns and are chart tacticians, just so that you guys can get a better understanding. I almost want to say that if you were to look at the daily chart, there's probably a volume shelf right up there at 48. Or is there not? There isn't?
Yeah,
Not
there's a
really.
peak of it, kind of.
The peak of it, yeah. All right.
Yeah.
So that's how you get targets in case anybody ever wants to figure out how that's done.
I I have a different way, and it's just I like this personally better. It's just a fib extension, which we talked about in a previous live session.
Mhm.
Since this just uses a math, I find this a little bit more accurate. But you can even see that the levels that I primarily look at for the targets, which is the 50 and the 61 percentile for the fib extensions, somewhat match up to the top of the box over here. So either
Yeah, it's
way,
also coincidentally,
preference.
it's also the previous month high. If you look at the monthly chart,
The monthly chart.
just can't make this up.
Yeah.
Yeah.
Yep. All right. Does anybody have any questions before we move on to the tickers you guys wanted us to look at? By the way, if you guys want to see the fib extension video, it's probably one of our most useful videos out there. It's this, where is it? This video right here, how to find levels at all-time highs. If you are able to use fib extensions, it honestly is like, it's amazing. So definitely something to put in your, I don't know, whatever you want to call it, tool set or whatever. So let me see. I'm reading through your guys' chat. Did you enter TLT? Why was your idea to go to sleep? It's also hard to convince myself when to exit a good trade. For example, to today's Lululemon. Not sure how long I should stay on. Well, I mean, that kind of ties into the whole target thing. Or even if you don't have, even if you're not going into FARVs, looking at potential targets, I mean, the most simple thing you could do is go onto whatever chart of whatever trade you're on and mark out the levels that you find important, right? So the first important level you could just draw right here. And we'll have a live session soon about how we personally draw levels. But you can see right here, right? There you go. You got 3 targets. This technically isn't a target because we kind of broke above that, and that was kind of where we entered. We could see our first target would have been like 405.11, and again, if you use the fib extensions, where is that at? Fib extensions you can use in any type of price environment, and you can see here again, fib extensions is one of the things that never fails. You could see literally the 1 percentile or the 100 percentile, whatever you want to call it, it literally wicked that, and that's why I trimmed majority of my position right there, because I hit the target that I want to hit. So if you haven't watched the video yet, watch the how to find levels at all-time highs, because that talks about fib extensions, and fib extensions is a great way I have found when it's come to my swing trading to find very accurate levels and targets for trims and exits. And again, this is you'll find all these videos in our YouTube channel. We posted the link multiple times, but you could search this up on YouTube. It's called Tailored Trades. I'll put it in the main chat just so you guys can see the link. I posted in. I'll post it in. Jeez, why can't I?
You put Einstein of Wall Street as talking about trading with Tom.
Yeah.
Yeah.
I did. Don't judge me. All right, looks clean. But yeah, definitely check that video out if you guys don't know about fib extensions. That really helps with what's it called? Finding levels and finding targets for trades. It works on day trades and swing trades because fibs is math, and that math kind of again it follows human patterns, so it's not just random numbers. It works majority of the times. How do you
If
find?
you have a hard time drawing fibs, you can always use pivot points.
Yeah, that's true, and we'll be having a live session on that soon as well. How do you find the tickers you want to trade for that day? If you're talking about swing trades, here's something I actually want to bring up. So one thing I actually forgot to mention that I do when I'm swing trading, this is gonna sound very cliche, but I'm gonna say it anyway because you guys should know this. So for example, the economic events tomorrow, not really that important, but they're still data. I'm trying to find. Okay, here you go. So on Thursday, for example, let's say it's Wednesday. On Thursday, we have GDP and initial jobless claims. Let's say I'm trying to look for swings. Before I even start looking, I'm like, okay, all right. The main question I want to first ask ChatGPT, and hold on, stay with me, is I'll put in the screenshot of the economic data events that are coming the next day, and I'll literally ask what stocks and sectors are not affected by these economic events, right? And if I search that up, it will show me the what's it called? The sectors I could look into. So utilities, that means energy stocks like XOM, Oxy, CVX. Consumer staples, as it shows the examples like Procter Gamble, Coca-Cola, Target's one of them. Healthcare, that's Johnson & Johnson, AbbVie, what's the other one? Pfizer.
Murder.
Telecommunications, Verizon, AT&T. You get what I mean? So like, there's so much you could do, like tell me the tickers, right? Like there's so much you could do with ChatGPT to also help you just kind of avoid being stuck in trades that are heavily affected by data, because that's one thing you have to always watch out for. Yes, if you're okay with risking a swing trade through a economic data event, that's absolutely up to you. I personally do not like doing that, because in the end, even a dollar means a dollar for me. So I want to make sure I put myself in trades that I have higher probability. That's just me. That's how I've found my success. To each their own. But I will make sure that the stocks that I'm looking at are not affected by the data event that's coming tomorrow. So, like for example, what I did today is tomorrow we have the durable goods orders, which again is not too much of an important data event. But I'll be like, I literally posted this, I think, and I was like, this is the economic events happening tomorrow. What potential swings from this watch list would not be affected by these economic events, right? And or no, let me
You're so
put which would be.
2024 using ChatGPT, bro.
Would you say?
You're so 2024 using ChatGPT.
I don't care. Give me a better. Oh, why you want me to use DeepSeek?
That's what I'm using.
Um, so yeah, then I would literally take a screenshot of my potential swings thing, right? After I narrowed down my list, I'll paste it here. I'll send that, and I'll literally it'll narrow down the stocks that are going to be possibly, um, you know, what's it called, affected by earnings, and I'll put that in a list or whatever, like most affected, least affected. So there you go. And then the whole watch list, like again, we post that in the live sessions. You could check that out. We posted the watch list for both JP and I. Need to find which channel it's in. I forgot. But yep. All right. What's the next thing that was posted on there?
So Target is going to be one of the most. Oh no, TJX. That's TJ Maxx.
Yeah, I love that stock actually.
God, when's the last time I traded TJ Maxx?
So again, someone else was asking about how do you find the tickers. Um, it's very simple. I personally like getting into bullish setups. So I go through my watch list, the mostly traded watch list, and I go through all these charts. I usually look at the 30-minute first, and then I try to see, is there like a bullish pattern forming, and that could be as simple as a double bottom with a strong bounce, or simply higher lows, right? And that kind of leads me and then to creating my watch list where I'd flag the trades I want to look at. So hopefully that answers your question. Could you talk about more about what looks nice to you when you're screening? I think I answered that. Um, Great learnings. Patterns don't repeat, they rhyme. Yeah, basically. Thank you. Would you buy anything for long term, especially when market is corrected now? Well, I'm not gonna go into deeply into that because we'll have a live session for that. But just know that for every market correction, there's always a set of stocks called safe havens, and what this means is they're not completely what's the word? They're not completely invisible, for lack of better words. Affect or not? They're not. It's not like they're not affected by, let's say, a recession or a market correction, but they'll be less affected, and their reversal to the upside will be a lot more uh, consistent and stable compared to like other stocks such as tech stocks. So like for example, a safe haven, two safe havens you could potentially look at, or three, is TLT, Silver, and Coca-Cola. They're all safe havens. Procter and Gamble is a safe haven, right? So what that means is, let's say a recession happens tomorrow, a stock like Avgo and Apple, these stocks will get affected a lot. Not saying they're bad companies, but since they have a lot of volatility, they're going to be affected a lot more during a market correction, which means your losses on that would be a lot bigger than holding a safe haven stock. And then the safe haven stocks are a lot more stable, which means they're more prone to respecting levels and bouncing off of levels. So there's that. How would you decide if the position size is light or normal? I found most of your recent swings were light. The reason why most of my recent swings are light is because we're going into a very unpredictable market the past year. We don't know what's happening, in terms of Trump coming out. One day he says, hey, this, and then next day he's like, that, So before we know it, one day we're friends with Colombia, next day we're not. And then one day we're enemies with China, and the next day they kind of put their feet over our heads and be like, hey, we got a better AI, right? So because of that, I size light because I could still make decent profits while not risking enough capital. And just because you size light, that just means you have to be better at your planning. What that means is you had to know exactly where your potential targets would be, so you could potentially leave runners, so those runners could do most of the work, since you're not sizing heavy to basically capitalize on the heavy sizing part, right? So since you're sizing light, instead of you have to capitalize more on your runners. That's at least what I've found from my experience. Let's see. Yeah, I think that's the last questions. So you guys could go ahead. You could keep putting questions, and you could start talking about posting tickers, and we'll go over the tickers. We'll probably do this for another like 30, 40 minutes, whatever, and then we'll end it after that. Hopefully, before I move on, hopefully what I talked about the last 10 minutes I hope it helped in some way, whether you disagree with it or you don't disagree with it. I'm just telling you something that's worked really well for me. So do with that what you will. But yeah, we'll move over to the questions and the tickers.